Welcome to this deep dive into the crazy world of Tesla stock.
Mm.
It's been in the news a lot lately, and with good reason. And you sent over this fascinating article from TSLA Investors. It's dated March 18, 2025, and it's called "Tesla Stock Under Pressure: BYD's Charging Breakthrough and Revised Analyst Forecasts Impact TSLA's Outlook." So let's unpack it together and try to figure out what's really going on with Tesla. What's driving this roller coaster ride.
Yeah, sounds good.
So first off, Tesla stock is getting hammered. It's down 3.85% today, and that's actually, continuing a trend. It already had this crazy drop of 15.4% on March 11th. What in the world is causing all this anxiety among investors?
Well, one of the major things is this rise of BYD. They're a Chinese EV manufacturer, and they just dropped this bomb. They've developed EVs that can charge almost as fast as filling up a gas tank.
Wow, that's seriously impressive. And I can see why investors are freaking out a bit. Range anxiety and the whole slow charging thing have always been these big barriers to people really adopting EVs full on. If BYD can pull this off, it's a total game changer.
Yeah.
But how does this even work? Is it something Tesla can just, copy easily?
That's the million-dollar question.
Yeah.
The article doesn't get into the nitty-gritty details of BYD's tech, but it does mention that this fast charging is already happening in some of their new models. So it sounds like they've made a massive leap in either their battery tech or maybe even the charging infrastructure itself. And catching up for Tesla won't be a walk in the park. They've put so much into their supercharger network, which is fast, don't get me wrong, but it's nowhere near as fast as a regular gas pump.
So BYD could totally jump ahead of Tesla when it comes to how convenient it is to charge.
Yeah.
And that's a big deal. Tesla's always been known for how innovative they are. Surely they're working on something to counter this, right?
Oh, absolutely. Tesla is a powerhouse when it comes to innovation. But this really highlights something important. Tesla is not the only disruptor in the EV world anymore. They're facing some serious competition from companies like BYD who are pushing the limits and challenging their dominance.
And you can see that competition playing out in how Tesla's market share is shrinking.
Mm.
I mean, they went from controlling 82.5% of the U.S. EV market in 2019 to less than 50% by the middle of 2024. Those are some pretty big losses.
Totally. The EV world is getting crowded fast. You've got the traditional car companies like Ford, Hyundai, Kia. They're all in the race now. And then you've got the new players like BYD. It's a whole new ballgame.
Okay, so BYD's fast charging is shaking things up and Tesla's market share is taking a hit. But the article also talks about these revised analyst forecasts. What are these analysts saying about where Tesla's headed?
Yeah, so the article mentions that there's this huge range of price targets for Tesla in 2025. Like some analysts are saying it could be as low as $249.76, but then others are saying it could go as high as $1,109.76. But then others are saying it could go as high as $1,109. It's wild.
Wow, that's a crazy difference. Why such a huge range? I mean, what are these analysts even looking at?
It all depends on how they're weighing different factors. Some are really focused on that shrinking market share we talked about and how fierce the competition is getting, especially from, companies like BYD. Then there's the whole thing with Elon Musk and all his other stuff,
Right. Elon Musk, he's not just the CEO of Tesla. He's also the head of the Department of Government Efficiency. Could wearing two hats like that be affecting how Tesla's doing? Is he spread too thin?
That's the question everyone's asking. Some analysts actually think that Musk's government job could be a good thing for Tesla. They think it could give them an edge when it comes to regulations, especially for their self-driving tech.
That's an interesting point. So his political stuff could be a double-edged sword. On the one hand, it could be distracting him, but on the other, it could give Tesla some serious leverage. It's a tough one for investors to figure out.
It really is. You can't deny how much influence Musk has on Tesla. And all these things he's doing outside the company. They can create opportunities, but they can also create risks. And the analysts are trying to figure out, which way it's going to go.
Okay. So we've got BYD changing the game with their charging tech, super crowded EV market, and Elon Musk doing a million things at once. It's a lot to take in.
It is. To really get a grip on where Tesla might be headed, we need to look closer at some of the big things that are going to shape their future.
And that's exactly what we'll be doing in the next part of this deep dive. We'll break down those key factors in more detail, looking at things like Tesla's earnings performance, their crazy robo-taxi plans, and how all these government regulations are playing out. Okay, so let's dig into those key factors that could really make or break Tesla's future. We've talked about the competition in BYD's crazy charging tech. But what about Tesla's, financial performance? The article says earnings are a big deal.
Oh, yeah, absolutely. Tesla's stock price, it's always been high, partly because people expect them to just explode and be super profitable. But honestly, their earnings haven't always matched those expectations.
So what are analysts saying about how much Tesla's going to earn in the coming year?
Well, the article says they're projecting earnings growth of like 28% each year. Sounds pretty good, right?
It does. But is that enough to justify, how expensive Tesla stock is right now?
That's the thing. Even with that growth, Tesla's stock is still way more expensive than other big tech companies. Like, if you compare how much you pay for each dollar of their earnings, it's way higher than Apple or Microsoft.
Oh, okay, I see. So the market's basically betting that Tesla's earnings are going to be even more amazing than those projections. But what if that doesn't happen?
That's the risk investors are taking. And there's another thing, Tesla relies a lot on those carbon credits.
Right. Those are like good behavior points for car companies.
Yeah.
Can you explain a bit more about how they work and why they matter for Tesla?
Sure. Basically, carbon credits are a way for governments to encourage companies to, go green. Companies making electric vehicles like Tesla earn these credits, and then they can turn around and sell them to other companies that are, polluting too much. It's been a pretty sweet deal for Tesla, bringing in a good chunk of revenue.
So what's the problem with relying on these carbon credits?
Well, their value really depends on government rules and what the market wants. As more and more car companies start making EVs, there are going to be more carbon credits out there, which could make them less valuable.
Ah, so it's like a limited resource.
Yeah,
Teslas can't depend on them forever.
exactly. They need to find other ways to make money, from actually selling cars and services. And that brings us to the next key factor, the whole robo-taxi rollout.
Oh yeah, Tesla's big plan to have all these self-driving taxis. This has been part of their vision for a while now. But how realistic is it?
It's definitely bold. The article even says that the global robo-taxi market could be worth almost $189 billion by 2034. Imagine if Tesla could even get a small piece of that. It would be huge.
But there are a lot of ifs, right? Isn't self-driving technology still pretty far off?
Yeah, there are definitely challenges. The tech is still being developed, and there are some big hurdles to clear, like how do you make sure these self-driving cars are safe and reliable in, the real world where things are unpredictable? And then there are ethical questions, like what happens if the car has to make a tough decision on the road? These are complicated things that need to be figured out.
And it's not just the technology itself. There's also all the regulations to think about.
Exactly. Governments all over the world are still trying to figure out how to regulate these autonomous vehicles. The laws about liability, data privacy, and safety standards are all changing. It's a moving target, which makes it even harder for Tesla to plan their robo-taxi thing.
So Tesla's got a tough financial situation.
Mm-hmm.
The robo-taxi plan is a long shot. And then there's all this uncertainty with regulations. That doesn't sound too good.
Well, it's definitely complicated. But there's one more factor the article mentions, and this one could either make Tesla super successful or totally mess things up.
Ooh, this is interesting. What is?
It's the whole regulatory roller coaster.
Okay, tell me more. What makes regulations so important for Tesla?
Government policies have a big impact on any industry, but especially one like electric vehicles that's changing things so quickly. Think about it. Government incentives can make or break whether people adopt a new technology. Tax credits, subsidies, money for infrastructure, it all influences how much people want something.
Right. Like those tax breaks you get for buying an electric car, those can be a big reason why people choose one.
Eh.
But what about Tesla specifically? How do regulations affect them?
Well, Tesla has gotten a lot of help from government incentives in the past. But the thing is, politics are always changing. A new administration could mean new priorities, new policies, and new regulations. It's hard to say what's going to happen.
And that's where Elon Musk's other job comes in, right? The whole Department of Government Efficiency thing?
Exactly. Some analysts think that because he's in the government, Musk can influence the regulations to help Tesla, especially when it comes to self-driving cars.
So his political connections could be a huge advantage for Tesla. But couldn't it also go the other way? What if people start turning against self-driving cars? Or what if a new government comes in with totally different ideas?
Yeah, that's definitely possible. It's a double-edged sword, for sure. Regulations are tricky. You never know what's going to happen. Tesla has to be really careful about how they deal with it.
This has been really eye-opening. So we've got these four big factors: earnings, the robo-taxi plan competition, and all those government regulations.
Yeah.
It's a lot to think about.
It is. It makes it almost impossible to predict what's going to happen with Tesla.
So how do we even make sense of all this?
Yeah.
Where do we go from here?
Well, in the last part of our deep dive, we'll look at what all this means for you. If you're trying to decide whether Tesla is a risky bet or a golden opportunity.
All right, so we've gone through a lot: the competitive landscape, Tesla's financials, those robo-taxi dreams, and that whole regulatory roller coaster. It's been quite a journey. But the big question is Tesla a stock worth betting on?
That's the million-dollar question, isn't it? And as we've seen, there's no easy answer. Tesla is this company full of contradictions. Like, they're pioneers in technology with a huge fan base, but they're also facing some serious competition and a ton of uncertainty.
Yeah, I hear you. So after all this analysis, where do you stand? Are you feeling optimistic about Tesla, or are you more on the cautious side?
Honestly, after this deep dive, I think the main takeaway is that Tesla just doesn't fit into a neat little box. You can't just say buy or sell.
Huh.
There are good arguments on both sides.
Sure. On the one hand, Tesla has completely revolutionized the car industry. They've shown they can innovate and get things done in a way most companies can only dream of. But at the same time, they're facing challenges they've never seen before.
Right. The EV market isn't just Tesla's playground anymore. You've got these established car companies with tons of money and experience, and then you've got companies like BYD coming in with game-changing tech and support from the Chinese government.
And let's not forget about those financial questions.
Yeah.
They're relying a lot on those carbon credits, which makes you wonder about their long-term profits. And their stock price seems to be based on some pretty rosy predictions about how much they're going to grow.
Absolutely. Tesla needs to show they can make money consistently from actually selling cars and services. They can't just depend on loopholes and risky bets on self-driving taxis forever. Those are important, but they're not the whole story.
So what does all this mean for someone listening who's trying to decide whether to invest in Tesla?
It means investing in Tesla is not for the risk averse.
Mm-hmm.
You really need to think about how much risk you're comfortable with and what your goals are. Are you okay with things being unpredictable? Are you willing to bet on a company that's shaking things up and changing industries, but also facing some serious headwinds?
It sounds like investing in Tesla is kind of like riding one of their rockets. Exciting and maybe super profitable, but also pretty dangerous.
Haha, that's a good way to put it. And just like with any investment, you got to do your homework. Don't just go by what you see in the news or what some analyst says. Really look at the company's financials, understand their technology, and think critically about who they're up against.
Right. This deep dive is just a starting point. Things can change really fast, like we saw with BYD's breakthrough.
Exactly. That's why it's important to stay informed. Keep up with Tesla's earnings reports, how many cars they're making and selling, any news about their self-driving tech, and any changes in regulations. All that stuff matters.
So after all this, what's your final takeaway for our listener?
My advice would be this: approach Tesla with a healthy dose of skepticism, but also with a willingness to learn. Don't let the hype or the fear control your decisions. Get the facts, analyze the situation, and then decide if Tesla fits with how you like to invest and how much risk you're willing to take.
Great advice. It's been really interesting exploring Tesla with you. I hope this deep dive has helped our listener understand the company better, the challenges they're facing, and the opportunities they have. And remember, the future of Tesla, like the future of the whole car industry, is still up in the air. Keep learning, keep exploring, and most importantly, stay engaged.
Well said. That's what makes this such an exciting area to follow. Thanks for having me.
Thanks for joining us. And to our listener, we hope this deep dive was helpful. Until next time, keep learning and keep digging.